Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Not only is the government almost out of money, they're choosing to spend more money on the wrong thing at the wrong time. And we're going to talk about what that is in this video. So let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Okay, Bob, so the government's not always known for doing the smartest thing, but this particular thing seems pretty dumb considering the timing of things. So, and you were digging up this info, so I'm going to kick it over to you.
Yeah, I'm not really sure I understand the game here, Phil. First of all, I understand the first part of the game. And folks, we're talking about oil and oil prices. So you had a situation where Biden administration just drained the SPR down to try to break the back, quote unquote, of inflation, to get ready for probably the re-election campaign. But then they took this drain of the reserves down to almost nothing. And then they're like poo-pooing it. And Saudi said, okay, we're cutting production. And then oil prices spike. Then you have Jennifer Granholm, the energy secretary, come out and say, yeah, I think we're going to fill the SPR if it's advantageous to taxpayers this year. Well, the minute she said it, oil shot straight up, Phil. And it broke over an important level, which we'll talk about in a second, and at the worst possible time. But before we get into that, let's show this next chart here is the demand, I think. Yeah. So we're trending now back above the last couple of years in demand. And this is not just the United States. Other charts show worldwide demand increasing as well. So demand is increasing higher than they expected. They can't kill the demand. And she comes out and says, hey, how would you like to be a car salesperson? Say, hey, if you just wait a couple of days, prices are going to go down. Are you going to buy that day? Of course not. So these traders are like, well, if they're going to be buying oil, they got to buy a lot of it. And If they're going to buy a lot of it, we might as well just buy futures because we got a dumb buyer here in front of us. Mm-hmm. And the timing, Phil, you're right. Look at this next chart. This is amazing to me. This is the oil future seasonality. And this is some of the things that we do at Trade Genius. I mean, this is called trade common sense. It's not like we invented seasonality, but look at this move. Okay, we're pushing into higher into May. We may get a little bit of a burp in May, but then look at that push into summertime going into July. And the expectations is, at least mine, I'm putting my neck out, and I've been telling everybody in the room now, I said, if we break 82, then we have a good chance of now clear the deck. I think the next move I'll show you guys in a chart in a second. The next move is much higher. And if you want to throw that chart on there, Phil, I have it kind of sketched out. Now, guys, this is a bit of an eye chart. So the most important thing I want you to take from this is that we moved from the bottom of its channel to the top of its channel since Granholm and the Saudis said what they said. They essentially put a floor into the oil price right at the dawn of the seasonality move. And now you see this green line, it kind of pokes from the top of out of the chart. It keeps kind of stair stepping down. Well, that's from the high from last year. This is what's our range trader, one of our indicators that we use that kind of helps us understand whether or not we're staying in a consolidation mode or we're trending one way or the other. Well, this basically broke a 9-month downtrend on oil, and it flipped this week, okay? And it cleared all of the resistances behind it, and now we're looking at $93 as the next area of resistance. And if you look at the bottom half of that chart, that's another one of our algorithms that looks at basically buying and selling pressure, and we're staying in the upper half on a breakout. And if it turns up from here, it'll confirm that move to I believe, $93, even though it's at the top of the channel. Sometimes these channels break out, and you got to look at our heat index to let us know whether or not to short this thing or to let this thing break out. And with seasonality, the easy play is to let it run higher, Phil. I want to throw it back to you. I want to get your thoughts on that. I know I trade this more than you do, and I want to at least give you the opportunity to kind of weigh in.
I'll give you some technical analysis. I mean, I agree with you. The timing stinks. I guess on the upside, Bob, they're not waiting until June and July, but they certainly could have done this at more opportune times, especially like going into Q4 of last year. But to your point on the chart, I would say that 93.74 level that you have highlighted there with that horizontal green line, exactly what I would go for, particularly because that's a double top, or what market profile guys will call that a poor high or a weak high. And you'll quite often when you start to get that move back, especially when we start breaking over some of this recent resistance that you see there on the chart below where we're currently trading at, those areas above like that tend to be a magnet. So certainly wouldn't want to fade oil here. I think it's got a date with destiny higher at 93.74 and probably more than that. But I think that's a pretty straightforward trade. And if you want to, get more surgical with it, you can look at the intraday charts and kind of pinpoint the dips during the day and things like that. But more or less, I mean, you can, going long here, a lazy long on oil is probably a decent play.
Yeah, and if you trade with us, guys, there's some oil stocks that we put into the room that we've been very successful with. So if you want to go to tradelikeagenius.com, you can join us, and I call these trades out. So there's plenty of opportunity here. The oil space, I've been bullish on energy even through this whole down move, because I've been expecting a day like today and a week like we've had here with oil. And I think with the geopolitics out there, I think this is probably one of the better plays you have out there. And Phil, do you want to talk a little bit about, while we're talking today, the market kind of hit its head on a ceiling here a little bit?
Yeah, so today's interesting because you have oil having a great day, green, and the market put in a horrible daily candle, red. And I actually think that that's a theme that can continue on where the oil markets, energy markets buck the trend because seasonality is going to take over. But yeah, let's take a look real quick at the index charts. So here's the old liquidity chart we like to share with everybody. You'll notice today's candle, super bearish. On the futures, this kind of double topped here on the futures. We actually took out that high and we did a daily engulfing. So we think that these lows here are in trouble. We do have banking earnings on Friday. It's quite possible we dip down into that. But, on the whole, what we've been noticing is that the liquidity, even though the liquidity jumped up from the bank backstop, what's been happening though is the Fed's gone back to tapering. Yellen's out of bullets. If Yellen's spending money, she can prop the market up, and largely that's what she's been doing over the last year. Otherwise, this market would be lower. So she's been helping to prop up the market. She's out of bullets, and she won't be doing that for the foreseeable future because she'll be reissuing debt, as we talked about the other day. The banks in the last week were actually putting more money into the market. However, in the last 2 to 3 days, they've been pulling that money back out. So we got to be careful here because if this liquidity rolls over, this market could certainly start to turn. Right now, it's still risk on, but we're kind of on that watch now where if this thing starts to roll over, you could have certainly put in another lower high. The spot we were looking at was 41.50 today on the futures, and we failed basically there. And as such, that's kind of our line in the sand. So I think that works out to be a 40.20 on SPX on the index. So above 40.20, we think it's possible to get up to this white line, which is a gap over here. And that would take us up to 42.30 basically on the S&P 500. Otherwise, we have a lot of bad structure down here. See all these holes in the daily bars that, market likes to go and backfill those things. So that's the downside risk. And we think that today is probably going to see some follow through just because of the bearish engulfing nature of that candle. So short term, tomorrow might see some more follow through, might see that follow through into Friday too. And if this market takes out these lows and the S&P 500 gets below 40.50, you might have a quick trip back to 4,000. And that really puts the bulls back on their heels, Bob.
Yeah, I agree. And just so you guys know now, this market used to be in lockstep. Everything moved up together, everything moved down together. We're starting to get some rotation here. So I think, for Phil and I to communicate more effectively with you guys, we can't really say we're macro bearish or macro bullish. We're really going to have to fine tune it a little bit. we're probably index bearish, commodity bullish, and you could just see like stocks like Bitcoin and the Bitcoin miners, they love risk on, and that's an area that definitely, we'll be talking about during that next upcycle where Phil has that green circle. But as we swing down here, gold market likes this credit contraction that we're going through now. And so there's going to be probably some interesting plays in here, so we're going to be bullish and bearish at the same time. And hopefully we'll be effective in communicating with you guys, kind of where we see the opportunities through this, I think a really tough road to hoe we're going to have here for the rest of 2023. All the way through next year. So pay attention to us, guys. Tell your friends about us. We'll try to hopefully guide you through. And if you want to trade with us, we'd love to have you. You want to get Phil's newsletter? It's a bargain compared to what you get out of what he gives you. I mean, basically, pure alpha-driven snow, which means that gives you opportunity to be very successful. So with that, Phil, I'll throw it back to you. And, guys, hit like and hit subscribe and hit notification and tell your friends. It's going to be fun times if you're a trader.
Bob, the only thing I would wrap up with is just the Fed minutes came out today. They were hawkish as we expect. They basically, I think, are leaning for at least another quarter point hike and definitely no cuts, even though the market wants to keep pricing in cuts. I just don't see it coming. And the inflation numbers came out today, right? Last month we ran up into CPI. It looks like we're doing the same routine again where we run up into the CPI number. And because the market reaction to the CPI number was very bearish, that daily candle right there tells you all you need to know. And I think we'll see some more follow through. But I think until the unemployment rate is below the CPI, year-over-year CPI rate, I don't see where they're going to be cutting. So you have to watch that. The unemployment rate's at 3.5%. I think CPI is over 5 and change. So when those numbers converge and invert, then you can start talking about a cut. And usually that's going to also be on the heels of a recession.
Yeah, if I can humbly correct you, I think you meant to say when unemployment goes over the CPI.
I'm sorry. Yes, when unemployment goes over CPI. Yep.
Great. Thanks, Phil. A lot of stuff going on, guys. And look forward to talking to you guys again tomorrow.
All right, guys. Talk to you later. Bye.
Trade Genius.